Adani saga is concerned, and this is what the management is saying, and I'm quoting, 0.88% of SBI's loan books is the total quantum of exposure to the Adani group. Hence, we don't envisage any challenge. Let's listen in.
Group. While we read your statements that the exposure is within the large exposure framework limits, could you tell us more about what the absolute quantum is? If there's any sort of concern there, if you've increased provisions or will look to increase provisions because of what's been happening, with the stocks in the last few days?
Two questions which you have asked. I will answer the first question in terms of how the asset book look like. I expect our effort and endeavor would be to keep the credit cost as low as possible. And the kind of trend which you have seen for the past 2 quarters, our endeavor would be to keep the credit costs around the same levels. But also, I think I'm a bit bullish in terms of how the economy looks like. So that is one of the reasons why perhaps in the near term, in this quarter, perhaps we should be in a position to see that kind of a credit cost. And the quality of assets, I don't envisage any challenge in the quality of assets. Your second question in terms of exposure to Adani, we have lent to Adani for projects which are in fact having tangible assets and which are having adequate cash generation, and they have been in a position to meet their obligations. And as far as the quantum is concerned, that is actually just about 0.8, 0.9% of our total loan book. So from that point of view, we don't envisage any kind of a challenge in terms of their ability to service the loan obligations which they have taken. So, and also we have not extended any loan against shares, etc. There is no such portfolio which we have. So the impact of the stock market prices of the stocks will not really impact any of the margin calls, etc., and any of the loans which they have raised from us. As I mentioned, that it is all against assets which are cash generating and which are having excellent track record in terms of the repayment in the past.
So if you could actually elaborate, 0.9% of SBI's loan book is the total quantum of your exposure to Adani. If you could give us the absolute figures in terms of what is the fund-based and non-fund-based exposure in total to Adani.
It is everything put together.
So if you could give us the breakup.
I think non-fund-based exposure, I would only like to mention that they are essentially letter of credit and the bank guarantees, and these bank guarantees are the performance bank guarantees. And this is not against any of the equity raising or any such activity. We actually break up wise. Maybe Swami, would you like to add something? If at all you have, or maybe you can.
Break up debt from us, and including a small investment of about 285 crores. So in all, the exposure total is about 0.88% as on 31st December. And as you clarified, sir, there is nothing which is against acquisition or against shares in this. Ritu, if you require any other granular data point that we can share offline with you.
In fact, we have not issued any guarantee towards securing any of the financial obligations or acquisitions either.
So there you heard from the SBI management as far as their exposure to Adani is concerned, saying it's just about 0.88% of their loan book and they don't actually envisage any challenge. Let's also